Hello traders, Gary Wagner here, approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 16th day of October, 2020, and this is the Daily Report for Gold and Silver, our weekend review. And this week, we did see gold close lower on the week. Silver have some gains, but effectively closed very, very close to the opening price. But the key right now is the budget deficit, because the U.S. Treasury Department released new numbers, and as expected, we have the largest budget deficit on record. More so, as we spoke about in our opening letter, if in fact, as the polls indicate currently, that former Vice President Biden wins the election, we could see a stimulus package in next fiscal year 2021 that blows the roof off of the expenditures of this year. And that would certainly put pressure on the US dollar and take gold substantially higher. We'll talk about that as we pull up our studies, but first to the price board. Although gold futures are trading above $1,900 per ounce, the December contract sold off to the tune of $6 today, currently fixed at 1902.90, down about 0.3%. We saw a much steeper decline when we look at spot gold, down almost $10 on the day, or 0.5%, at 1898.59. This all in occurrence with some dollar weakness providing a little bit of tailwinds, but really not enough to prop gold prices higher. Silver did show fractional gains today, gaining about 5.5 cents, currently at 24.28. And when we look at the ETFs that we have been following, both SLV and GLD closed lower. SLV at 22.42 per share, and GLD closed down by approximately 62 cents a share at 178.30. Traders, as you know, we did pull profits earlier this week when on October 13th, our stops were hit in both gold and silver, and we pulled profits on both futures contracts. In terms of our gold trade, we got out at 1909 with the market currently at roughly 1903, so about $6 below our exit price. On yesterday's show, we talked about the fact that we do have a defined channel or trading range that we have seen gold in, where we can draw an upper level trend line with these series of tops, which roughly matches with the 50-day moving average, and the lower channel really based upon these lows that have come into the market, and it has been really hugging the 100-day moving average. My sense is that I would buy the bottom of this range, meaning if the market trades a little bit lower on Sunday or Monday, and then look for it to trade back to the top of the channel. The other thing that would trigger a buy signal would be a break above this upper level channel line. Because other than that, although I do see a bias to the upside, and we can see that in this channel, we have to acknowledge it has been trading within a range, and that range has been defined by this high up here at around 1940, and these lows that are coming in at approximately 1860 to 1875. It is for that reason that over the weekend we are going to remain flat with no active trades in gold or silver. But as I said, I would look to buy the bottom of this channel next week, or I would look to buy a break above this top channel. And traders, we also, as I said, pulled profits on our silver trade. We got in just below 24 at 23.95. We got out at 24.50. We took a profit of about $2,700 per COMEX contract on the trade, and the market right now is trading roughly 25 cents below our exit price. We will remain flat also in silver as we go into the weekend. And like gold, we see a very, very similar scenario. We can see that the 100-day moving average has literally defined some of the lows that come in. We can also make a case for a market that has been trading in a tight range with an upward bias, or a channel very similar to what we're looking at in gold. Typically, we see an inverse correlation between gold and the dollar. That's logical because gold is paired or traded against the US dollar. However, over the last couple of days, we have seen an inversion of that correlation to a positive correlation, because we saw gold go up yesterday, as you can see here. We saw the dollar go up yesterday, as we can see here. Today, the dollar was down, and we also saw gold down. However, I think that this normal negative correlation will be highly in focus as we get closer to the presidential election. That will occur in just a little bit over 2 weeks on November 3rd. And if, in fact, as the polls are indicating currently, Biden wins the presidency, we can expect the budget deficit, which is at record numbers this year, to get wider or greater. We could have one of the largest budget deficits on record, if not the largest on record, because the pandemic is lingering a lot longer than many had believed or had hoped for. A vaccine now is believed to be anywhere between, say, at the earliest, the late part of November, but more possibly the first or second quarter of next year. And until there is an effective vaccine which can return not only America, but the world to its new normal, however that looks, we can expect economic contraction, and we can expect huge expenditures by governments to support their economies and to support those millions that are unemployed. It is for that reason that I truly believe we will see gold take off prior to the election. If Biden wins the election, we could see gold surge to $2,000 per ounce, and that is approximately $100 from current pricing. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Have a great weekend. Stay healthy. Bye-bye.